Welcome, everyone. Thanks a lot for joining in this special edition of our webinar, The Indian Growth Story. How can you be part of it? It's pretty exciting topic for me, and I'm sure it will be a good informative session for you all as well. Once again, welcome you all. I'm Shan. I'm from FinAdvisor, and I'm broadcasting this from Sydney, Australia. Okay, so let's get started. First of all, I would like to recognize the first peoples of this nation and their ongoing connection to culture and country. Let me quickly share the screen. I've not done that. Okay, welcome back once again. We recognize the first peoples of this nation and their ongoing connection to culture and country. We acknowledge the First Nation people as the traditional owners, custodians, and lore keepers of the world's oldest living culture and pay respects to their elders past, present, and emerging. A bit of a disclosure. All information contained at finadvisor.com.au and on any podcast of FinAdvisor News or any broadcast like this is for education and entertainment purposes only. It's not intended as a substitute for professional, financial, legal, or tax advice. The host and any contributors to finadvisor.com.au are not financial professionals and are not financial advisors as such. We do not operate under AFSL license, and it's only for educational and information purposes. For any advice, you should seek or you should take advice from your financial advisor as well. Okay, so with that, we'll start our session. So the topics that we are going to discuss, the Indian economy at a glance, growth in macroeconomic factors that have been happening in India for, let's say, last 10, 15 years, how it has shaped over these last couple of decades, maybe on a strategic growth path in terms of investment and in terms of economic development. Then we will briefly look into what are the different investment opportunities. It is not a financial advice or as a recommendation as such. It is just an informative discussion where we'd like to provide an information how there are different avenues of investment in India, even if you are not in India, even if you are in, let's say, in Australia or the US as such. And then, of course, the time is now. Okay, so let's have a quick look at the different parameters or maybe certain indicators within the Indian economy that have been happening at this moment. Indian economy today is the world's fastest growing economy as such. I have just politely mentioned that it is probably one of the fastest, but this is the fastest. The growth in the GDP in any probably G20 countries is the highest in India currently. It is an attractive investment destination. There are lots of foreign direct investments happening. One of the key factors in the growth, or you can say economic strength of the country like India, is a largest youth population in the world. That's got huge domestic market, so India is not really dependent on exports income and that's why probably it was able to sustain a lot of crucial you can say blows in the economy during COVID and on the aftermath of Ukraine war, and then also India was able to grow at its own pace, and it was able to survive, or you can say sustain the kind of economic activity that is normally required to run in such a big country because of huge domestic demand in the market. Of course, improving infrastructure landscape in the last maybe a couple of decades, there has been a consistent effort to increase the infrastructure in terms of the roadways, in terms of the railways, in terms of the airports, in the the current government, they are put up an ambitious target of having around 100 established airports throughout the country, and it's well on track. So, in terms of the highways, there have been a lot of highways built in the last 10-15 years since the push in, I think, in the government from 2000 onwards, when the Atal Bihari Vajpayee ji was prime minister. From that point of onwards itself, there was a strong momentum in the highways as such. And of course, the rail infrastructure is one of the envious network in the whole world. No country has such a massive amount of rail infrastructure in today's day. Rising global competitiveness, growing innovativeness. We'll discuss more about these specific points later on. Rising economic influence, and then increasing digitalization. All these points we will look into a little bit more in the coming slides. So if we just discuss in terms of gross domestic product, 13.5% year on year in the first quarter of this financial year. In India, the financial year starts from April. So from April to June, it was year on year 13.5% growth in gross domestic product. Gross value added year on year 12.7% in the similar period, quarter one of this financial year 2022-23. Index of industrial production year on year 10% in April to July, the same quarter. Of course, one of the concern is the consumer price index rise 7.11%. It is across the globe. It's inflation is high in most of the countries. Still, 7.11% for a country like India is not that much, considering the kind of growth that is happening, considering the increase in income that is happening for the people there. So 7.11% is still very, very reasonable. Net foreign direct investment $3.74 billion in June 2022 around. Outward foreign direct investment $1.11 billion in July 2022. So Indian companies and entrepreneurs are not only investing within India, they are also investing in other countries. Foreign exchange reserves at a very solid $564 billion, and this is after the Ukraine war. Prior to the Ukraine war, it was almost touching almost $8 trillion, and that was really very, very impressive, or we can say very prudent management in terms of by the Reserve Bank of India. Overall exports and imports grew by 17.68% and 45.74% in the period between April to August in this financial year. Private equity and venture capital investments, $3 billion in July 2022. Similarly, mutual funds asset base has grown up to $473 billion in July 2022. Mutual funds asset base that's a repetition of the same information. Fiscal deficit 20.5% of the budgeted estimates as of July 2022. Well, that is being considered by the government to moderate it down to a certain as per the guidelines. Okay, let's look into some other factors, or maybe the perspective from the global experts. World Economic Forum, as per World Economic Forum, India is now the fifth largest economy in the world in terms of the GDP. Well, that is the latest information. Even if you consider that as a quarterly information, quarterly update, India was still sixth largest economy, but currently it is now fifth. It has already taken over the UK. Deloitte predicts India will reign as the world's fastest growing economy over the next few years, driving world growth even as several major economies brace themselves for a slowdown or possibly a recession. Um, there are some similar quotes you can read out by different experts, or maybe you can say different global bodies, whether it's the PwC Global, International Monetary Fund, or Organization for Economic Cooperation and Development. Everyone is projecting that probably the next decade, or maybe if not more, would definitely belong to India's growth, and they will um, that is highlighted in every publication across the globe. There are certain major structural reforms that has happened in the last probably 7-8 years under the new government. Um, Definitely goods and service tax, which has been in discussion for more than 15 years, as of now, was finally implemented, and it was very comprehensive piece of legislation, both in terms of its coverage, and both in terms of how it was practically implemented with the modern information technology or the available IT system. So that GST was implemented finally in 2016, and since then the country has stabilized a lot. It has already been, the part of the economy now. All the companies or the businesses are well, channeled, can say, or maybe well established with the process now. So there are no more challenges in terms of implementation there. Insolvency and Bankruptcy Code, IBC 2016, that has helped a lot of underperforming companies to liquidate or to be sold onto new buyers. Real Estate Regulation and Development Authority Act 2016, enactment of labor codes between 2019 and 2020, Essential Commodities Act amended 2020, National GIS enabled Land Bank System 2020, and I can continue for longer. MSME definition, which helps the you can say small and medium enterprises. Production linked economic incentive system 2021, enhancement of FDI limit in several key sectors, and improved tax compliance, and improved fiscal discipline that has happened over the last many years. Now, the latest, boost that the Indian economy is going to get is through the implementation or the launching of the 5G system. 5G was recently auctioned by the government, central government, and it has been well received by the mobile operators there. The pricing was very reasonable, so the companies were able to afford it in terms of their coverage that they are getting. The prices are reasonably affordable for them. However, the implementation or the usage of that technology has been going on for quite some time now, even though it was officially launched only a few weeks back. But already the companies like Jio, the companies like Bharti, and the companies like Adani Infotech, they are able to launch new services, or even Vodafone, they are able to start the trial process in certain sectors, and already they are using this technology in certain areas of the business. It is going to definitely boost education, spreading out the cloud-based education to the masses, to the more than a billion population of India. That would be a major boost in terms of working high-speed internet using the latest technology, BharatNet infrastructure, using fixed wireless access, and other services, that will be a massive boost to small businesses and of course large corporates as well. In terms of healthcare, it will be a key driver to provide telephone, or you can say remote healthcare services. Currently, most of us know getting a professional doctor in a rural area or a remote location is very, very difficult. And that's a challenge like any other country in India also. So when 5G open ups or the 5G technology is available, then it will be a massive support to the rural healthcare system from the doctors and the professionals in the industry. So that is definitely it'll be a big boost. Similarly, agriculture in terms of the forecast, in terms of planning, and very data based, you can say, approach, that is going to happen in the modern with the modern technology. And of course, in terms of the digital um, artifact development, like marketing materials, and like say even some displays and content wise, that metaverse kind of content that the whole world is talking about, all this would be possible using the latest technology. In gaming, India is already a very, very significant player. I think it's already the third highest you know gaming system manufacturer or gaming software manufacturer in the world. Okay, now let's just a few words about our new venture, Amaze Accounting. So at Amaze Accounting, we provide accounting services along with other taxation and related services. So the key differentiator in our business is personalized services. We provide individual attention. We are open on extended hours and weekends. We provide proactive recommendation wherever it is applicable in terms of tax planning, in terms of business advisory, or it may be in terms of business structuring, restructuring to enable growth in your small businesses. We can work remotely to and support any destination in any businesses in across Australia, and of course you can always reach out on calls. In terms of services, we offer business startup services, especially business advisory and startup and scale up growth strategies. In terms of compliance, we can help you meet all the compliance requirements about ASIC and ATO, and of course bookkeeping, which is the bread and butter of an accounting firm, then payroll and planning, cash flow and budgeting tools that we can help you with. We also cover the SMSF journey from initiation to regular maintenance, compliance, and going into a complete retirement planning tool for you. Besides, we also provide education on stocks and options coaching. Okay, so getting back to the topic. One of the important changes that has happened in the last few years is the development of a unified payment interface (UPI) system, which enables point to point payment system using the existing bank interface, and where there are no additional charges involved, whether it's by let's say Mastercard or Visa or any other network. So it is using the existing bank network. People can easily transmit the money using their phone. It's a very user friendly interface, and there are no costs involved in that. Also, this open platform can be then used by different other payment service providers like Amazon Pay, Google Pay, and all of them are using that. I think WhatsApp is also providing service there. In terms of payment from mobile to mobile, it's all using this UPI technology. In terms of concept, it was originally conceived. The idea was originally started, I think, somewhere at around 2007. But then the work progressed with that, and finally it was launched in 2016 as a service by the National Payments Corporation of India. In the financial year 2022, as of now, PhonePe held 46% share of the unified payment interface usage in India. Other than that, there are a lot of others, like say Google Pay, even Paytm also uses the UPI system where it is possible. In terms of growth, if we talk about, it started with a very modestly in the first couple of years, and then steadily it picked up the growth. And then currently, as you can see, in February 2022, 5.3% of total transaction value worth 8.26 lakh crores in Indian rupees were under INR 500, as opposed to 67% of the total UPI transactions volume. P2P payments constituted 58% of the total transaction volume, and the rest 42% were P2M transactions. So the basic idea is that low value transactions emphasize the factor this digitization of payment has actually happened on the ground, even by the smaller businesses or maybe individual level as well. So that was one of the main objectives of Reserve Bank of India, to make this facility available for people who are devoid of the traditional banking facilities or the usage of debit card and credit card. So that is the massive achievement in terms of that. Okay. The other thing that we discussed earlier is about GST. GST revenue has steadily progressed over the years, and if you just compare year-on-year figures for all these months, April, May, June, and July, there is a growth of at least between 20 to 25% in all these months. Of course, there are seasonal differences in different months, but overall, if you see in every month, whether it's April, May, or June, every month it is more than 20 to 25% jump in the current financial year in comparison to the previous year. Monthly revenue of more than 1.4 lakh crore Indian rupees is a norm now. Earlier, it was a benchmark. Now that benchmark has already been crossed many times, and for the last 7 months, it has crossed that. Okay, in September, more than 1.1 crore waybills and e-invoices, which combined 72.94 lakh invoices and 37.74 lakh e-way bills generated without any glitch on the GST portal. It's a massive system, as I mentioned, and it uses the best state-of-the-art technology in terms of processing different transactions. In no other country in the world, that process is so comprehensive and you can say so timely in terms of managing the GST. Okay, in terms of innovation in economies, Global Innovation Index database by WIPO, India is at the forefront of growth in Central and Southern Asia, along with all the other regions. In terms of the startups, there has been a steady focus by the government to develop the facilities, to develop the infrastructure, and provide a stable environment in terms of growth, in terms of finance, in terms of economic management. There has been a consistent effort to provide a easier to do business environment in the country. And as of today, there are 15,000 new startups in India, whereas which is second highest in the world when you compare all the developed countries like US, UK. I think China's data is not there. I could not find a specific to data from China, but still India is the second largest creator of startups today. There are so many unicorns that are being created every year, and um, of course, Gautam Adani is the richest person in the world. Sorry, I think he's the second richest person, right? The first richest one. I just forgot that. Okay, but there are so many billionaires being created in the top 100 today by India as well. Interest rate hike by all the G20 countries. Of course, India, if you compare India's uh, inflation rate, the consumer price index, or in terms of the other cash rate and bank rate, India's rate is still very, very reasonable. Interest rate hike is been only 5.9% or 5.4%, you can say, whereas in all other countries where the normal economic growth is very less, but still the interest rate hike is significant. Like if you compare countries like South Africa or Brazil, of course, it's very high. And even in the United States, it was around 3.25% in the month of August, and then 2.5% in September. Okay. The IMF perspective on India's development, global economic outlook was published by IMF. GDP growth rate for FY23 is currently 6.8%, and it has been lowered from 7.5%, but still it is well above any other economy in the G20 space. The international economy is predicted to be in poor form, and the global economic growth rate would be only 2.7% as estimated. As of, I think it was published in the month, a couple of months back, if any country can avoid, in terms of all the OECD and G20 countries, if any country can avoid a recession, that will be India. India is the most stable economy as of today, and they can withstand any other global challenges in the next couple of years, I would say, at least. Okay. One of the interesting, data that I wanted to create is how the exchange rate has been playing up in the for the comparative economies, and India's exchange rate movement has been very, very stable over the last 10, 15 or more, even more years. And wherever we have compared, it is still it's not very highly fluctuating, and it is well within the expected, or the reasonableness of the movement. So even if you are investing using your US dollar or any other currency, still there is a greater value in terms of the growth that is happening, even if we consider the exchange rate. As of now, the US dollar is around 82.3 rupees, and if you compare with maybe Australia, it's around 52 rupees. If you compare China and all that, you can see there is a steady movement there, but they are well within a particular range. So there's no massive movement as such, and most of the movements are due to the movement in the US dollars, or the strengthening of the US dollars. In terms of key socio and economic indicators, there are certain areas where there can be improvement, like say Human Development Index, ease of doing business, happiness index, and innovation index. At this moment, even GDP per capita, you can see there is a lot of room there to grow. So my take on this particular statistics is that whatever India has achieved in the last 30, 40 years since liberalization in the year 1992, um, India is already the fifth largest economy. If all these parameters are being, improved in the last couple of decades, the per GDP per capita, the other indices like ease of doing business, innovation index. If India improves, and which it should, considering all the consistent measures that are being taken, then there the overall, not only the overall GDP would rise to almost second or third in the next 2 decades, but also India will be a significant player in economic importance, and there's no doubt there will be massive opportunity created within the country with this growth. So where there are, if you consider, if you think that India has already saturated, or India has already exhausted all the options, that's not right. India has more, or maybe at least 10 times more room to grow from where it is currently now. So there is tremendous opportunity available in all the segments, in all the sectors, that world is not enough, you can say. Okay. In terms of today's position, you can see India almost dominates around 5% of the global GDP share, similar with France and UK. Japan is still 8%, and China 27%. US is still the leader with 35%. But probably that is going to change in next couple of decades as well. Now, in terms of growth in the GDP in comparison to US and Australia, if we can see, India's GDP has consistently risen. India is the green one, and sorry, China is the green one. India is this is blue. So that is the growth of India's GDP over the last more than 60 years, 6 decades, how India has shaped itself in the GDP. When we look at the stock market performance for this year, Sensex in India is the leading performer in the world index. If you compare with any other global indices, in whether it's SPX, whether it's an Australian index, whether it's Hong Kong or UK, if you compare any other index, Sensex is the the leader in this as of this year 2022. If you compare almost since January 2022, all of them were at their peak. Indian Sensex was also at the peak, and SPX or Nasdaq was also at the peak. But since then, the decline in other indices have been very, very sharp. India has recovered really very well in the last few months. Okay, now we'll look into some opportunities, or how we can, or one can invest in India. If you are in India, of course, there are thousands of opportunities. But even if you are not in India, then how, as an individual or as a company, how you can invest in different ways in the Indian economy. Now, there are obviously blue chip stocks which you can buy, and directly, maybe if you are not a citizen of India. However, if you have the OCI, then you can always open an account, a brokerage account with the Indian companies. But if you have, even if you do not have the OCI, then there are other opportunities as well. If you would like to know more about it, you can just send us a query, info@finadvisor.com.au, or you can email directly to me as well, shan@finadvisor.com.au, and I can help you with understanding the process, how you have to go through the process. For the sake of time, I'm not going into details, but it is possible to do that investment directly into chip stocks as well. Of course, there are mutual funds. So if you open an account with a brokerage firm, you can use their portal to directly invest in mutual funds as well. Then there are exchange traded funds, and exchange traded funds are both in the Indian market, or there are exchange traded funds, global exchange traded funds in the both in the US and in the Australia, specific to the Indian market. You can use them as well. Then there are ways you can invest as a foreign institutional investor. Of course, it's a higher level of investment, and you need to get registered with the SEBI for that purpose. Of course, if you would like to invest directly in one particular company as a subsidiary or maybe as an associate, then you can invest using foreign direct investment rules. Finally, we will also look into something called alternative investment funds, where you can invest in a particular fund which is more focused on startups and other companies, where you are not directly, or you can say more of an unlisted companies. Even that can be also listed companies, also depending upon which fund it is. But you are not directly investing in any particular stock. You are investing in a particular fund, which are not really a mutual fund, because mutual fund is separately recognized, but it's more of a kind of a growth fund or venture capital fund. We'll come to that later on more. Just out of curiosity, I looked into five top stocks in the Indian market: Reliance, Infosys, Hindustan Unilever, TCS, HDFC. You can see what level of growth it has given since, let's say, somewhere in the last 5 years. You can say from June 2017 till, let's say, June 2000, or this is now September now, so, or October now. So you can see the kind of performance it has given in just 5 years. Reliance has grown by 263%, Infosys 200%, TCS 147%. So there is tremendous growth in all the, even the blue chip stocks, which are supposed to be a bit mature and established. The growth in the other mid cap stocks is individually even higher, of course. Even a traditional stock like HDFC has grown by more than 51% in the last 5 years. We compared some mutual funds just to give you an example. I have not done analysis on all the mutual funds, but this is the specific mutual funds within HDFC. And if you compare the 3-year returns or 5-year returns, even on very conservative funds like hybrid debt fund, the returns are around 7%, 9%, or something like that. Income fund, which are mainly corporate bonds and all that, they are also, it is 4-5% easily on a 3-year or 5-year basis. And of course, the equity funds, which are mainly based on top 50 companies or top 100 companies, they are also more than 12%, 16% in general. So if you compare the long-term performance of the mutual funds, which are pretty, like, not very aggressive even as such, which are moderate risk, or you can say high risk but not really aggressive, they are also returning more than 12%, 15%. So whichever avenue you adopt, there are, of course, there is always a balance between risk and performance. Of course, if you would like to lower your risk, then there are avenues for that, and you can still get a significant return on your investment. These are some top 5 mutual funds. When we looked into high funds with higher asset under management level, overall 3 to 5 years, the consistent performance between 12 to 16%, 17% growth. So if you are comparing the managed fund return from from Australia or in the US, there's significant upside there, or I can say the growth there. In terms of ETFs within India, which are listed in SEBI, and their performance of around 20 to even between 16 to 20%, if you see within the last 2 to 3 years. So there is, if even without doing much research as such, or even cherry picking the stocks, it is possible to get a standard good return on these companies or these particular mutual funds and ETFs. Some of the biggest foreign institutional investors who are investing in India: Government of Singapore, Euro Pacific Growth Fund, global pension funds, and of course other foreign institutional investors. It is expected the foreign direct investments would be around 120 to 160 billion US dollars per year by 2025. There are some investments mainly from US. Earlier it was Mauritius, and currently US has replaced Mauritius. It invested more than 14 billion US dollars in India. Companies like Google, Apple, Microsoft, Ford, ExxonMobil, everyone is investing in India in their plant, or you can say in their production capability. Other foreign direct investors are Cayman Islands, Netherlands, Japan, and the UK. Okay, in terms of the foreign portfolio investors, US at the top, US, then Mauritius, Singapore, Luxembourg, and you can see the numbers over there. And it is not just a story about what is happening in 1 or 2 years. It has been consistently increasing over the last many years. So there is a stable investment, let's say, environment there. One of the analysis that we did was the return on fixed deposit rates, and these are NRE fixed deposits rates, even based on US dollars. There are significant, high rates there. All these, if you are opening a non-residential external account, NRE account, and if you invest from that account, then you also get the benefit of what they call it, a GST cashback or something like that. You whatever investment, like whatever the GST component on any particular charges happen, you get the GST component back. Plus, you are not liable for income tax. These are sort of tax-free income if you are investing through the non-resident external account. So all these returns are post-tax, you can say zero tax. Well, of course, this is not an investment advice, and for any tax-related advice, you should consult the holistic situation. What might be the tax consequence in Australia or the country where you are, because India is part of the double taxation agreement treaty, and whatever the taxation provisions apply there, you will be subject to that. But in general, that is tax-free, at least in India. Okay, there's another concept called alternative investment funds, where the lot of venture capitalists create their own fund, and the focus is mainly on investing on startups or the non-listed companies, where there can be higher returns for the next 5-10 years, and you can directly invest in those funds. There is no major approval required. Just you can get yourself registered using an intermediary, and then you can get into these investments. If you'd like to know more about opening the account with the intermediaries or how you can register yourself, I can help you out with that information. It is, of course, publicly available information, but still, if you want specific from agencies, I can help you with that as well. Okay, so there are, can say, 5 or 6 categories of these alternative investment funds: infrastructure fund, social venture fund, um, venture capital fund, SME fund, and others. Recently, the government announced a special kind of a social stock exchange would be open, where even the not-for-profit sector would be able to tap capital from the venture capitalist and other investors. Okay, so these are the 6 ways these alternative investment funds operate in India. They operate either as a hedge fund, with the type of they're collecting money from the investors and investing in equity markets, which are relatively risky, or maybe international debt or domestic debt. The management fee varies between 2% to 2% to 20%. Then there is, of course, private equity investment in companies which are not listed in public exchanges. So you can get into those alternative investment funds. They can also invest in commodities or real estate, venture capital, and peer-to-peer lending platforms as well. So the crowdfunding or the peer-to-peer lending is also quite prevalent in India now, and you can also get an your buy of investment there. Okay, we also did one analysis of the returns from Nifty while considering the exchange rate in Australia. So if we consider that what happens if we invest using our Australian dollar into the Indian market, of course, there will be some erosion, or you can say there will be some cost in terms of the exchange rate fluctuation. So we considered that what would be the return, even if we consider that kind of exchange rate movement between Australian and Indian. And this analysis we did for last 10 years. So suppose you had invested 10,000 Australian dollars back in 2012 in, let's say, the Nifty index, it would have grown to almost $30,000, 31,160 Australian dollars in 2022. So almost 3 times, more than 3 times return in just 10 years. So even if you consider that exchange rate factor, there is still strong growth available. Any questions? Anyone? You can send a message in the chat window, and I'll try to answer them. Hopefully you found this information. Let me maximize the screen. Chat. If anyone has any questions, you can reach out to me separately as well after the presentation, and I can help with some personal information. Whatever I have, I can share with you. Otherwise, you can, if it is a general question, you can ask now as well. If you have any question, how to invest in India, or maybe how there can be certain factors like what is the security in terms of the stocks that you are investing in, or in terms of the confirmation that you receive from the respective regulatory authorities, how that process works. I can let you know that. Like, say, one of my clients was asking, if we invest in shares, how safe it is. Like in Australia, we have the chess system, right? So India has, further additional or further securities in terms of that stock market investment. Any investment through the stock exchange can be verified online directly in that respective exchange. If it is National Stock Exchange or whether it's a Bombay Stock Exchange, after the transaction has happened, after the close of the market hours, you can go personally and you can check with the specific reference number that you get from the broker, and you can check that in the stock exchange portal whether your transaction is genuine, whether it has been properly routed through or not. So there is no loss of any securities or anything like that. So it is even better than our chess system in Australia. Okay, just wait for maybe a couple of more minutes in case anyone would like to put any messages in the chat window. Otherwise, I'm done with today's presentation. Hopefully, you found it useful and informative. We are planning to conduct such sessions on a monthly basis. Most probably, it would be in the last week of the month. Um, it's just purely based on my personal engagements. So there's nothing other factors there. But my plan is to do it on a monthly basis, on the mostly on the last week or the last one week in the every month. If you are interested in any particular topic, please let me know, and I can include them in my future sessions. Okay, looks like we don't have any questions. Thanks a lot for attending. Thanks a lot for your time in the evening, and for your encouragement. We really do appreciate. And if you have any topics in mind, please let me know. Thanks a lot once again, and we close it here. Thank you.